All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market's under siege here today. All sell pressure here early on, and it's something we talked about last week. The changing nature of the market. The market changed last week, and there's some serious implications when it comes to that. So this morning I want to take a look at the nature of a pullback. Also, we'll take a look at the ISM data since I didn't look at that with you here last week, and then the challenge. Now for the challenge, there are only three stocks with crossovers happening right now. GOLD has a bullish crossover, but the stock is moved two average true ranges to create it, so it's not a bullish signal. And then on the downside, Procter & Gamble and Vulcan Materials both have downside 3-7 crossovers, but neither are close to a signal there. So this is a, kind of like I talked about last week, with most stocks coming off of highs, those initial downside 3-7 crossovers aren't creating bearish signals to play some of this run, this run down. Hopefully we will get some of that come in before the sell-off is over. But we'll see. Whether we get bullish crossovers or bearish crossovers or bullish signals, bearish signals, we'll be playing the next signals that come on board. Now, my daughter and I have an image up here on the screen. It's just a stock image, Google search, just a crowded theater entrance. My daughter and I, we enjoy watching Alton Brown on Food Network. And the show Good Eats specifically, and it no longer airs, but the reruns and everything else. And I think we've watched every single episode over the course of the last 10 years, and we enjoy it. Well, Alton Brown took a show on the road and was coming here to Salt Lake, and it was one of those pretty cool experiences. And the theater was very crowded. It was very crowded to get in. And when we got in, we got to our seats, and we were kind of, towards the front, but, not right up front. But my daughter looked at me. She said, "Daddy, I got to go to the bathroom." I was like, as everybody was flooding in, the chances of getting out, or the difficulty in getting out, was going to be tough, right? And, you think about that, and you think about a market that's kind of crowded to the upside. Everybody's going in, finding places to short, finding places to get out becomes kind of difficult. The timing of it all, just becomes a little more difficult. But think about when the theater lets out and everybody is racing to the exits. Can you imagine if you forgot something on your seat? And now you're trying to get back in while everybody is going out? How difficult is that going to be? Right? Trying to get it back into the theater when everybody's going out the doors. Can you do it? You sure can. Is it easy? Nope. Are you going to get bumped along the way? Oh, you betcha. Right now, this market is the theater that just let out. Everybody's going for the door. We saw that change in the metrics to suggest it last week, and everybody's going for the door. So can you pull out your shopping list and say, you know what, I'm going to look for places to get in? You can, right? You can, and, you may find a little bit of success, but, man, is it going to be difficult. It is going to be very difficult. You're going to get bumped along the way. It's going to be maddening, and it's just not the time to pull out your shopping list and say, hey, you know what? I think I'm going to go buy this for the long term and that for the long term. And we talked about this a little bit last week, when I talked about Rio, right? I would like to buy Rio. It comes down to levels I've been looking at, but the overall market dynamic has changed, right? Someone pulled the fire alarm, and everybody's heading for the exit. So the chances of me being able to pick and say, oh, well, Rio right here on the 200-day moving average, that should act as support. No, because right now, none of those factors are coming into play. Everybody's just trying to get out. They're all just trying to get out. And so trying to get in is going to be very difficult. And I know, yes, I can click the button. It's easy to get in. But get in and get in at a good, at a price that, I'm very comfortable with, or, hey, is the absolute bottom. It's going to be very difficult. It's going to be like trying to get back into a crowded theater that just let out. And, what you think about the whole theater thing? What happens, right? You give it some time. You give it 10 minutes, right? You give it 20 minutes. You give it 30 minutes, right? A lot more people are now out the door. Is it as crowded? No, it's not. You get this kind of lull. You get this kind of just calm. And that's when it becomes a lot easier to look to get back in. And so I know there's this element or this kind of mentality that comes in with investors, and it's natural, of, hey, you know what? We finally have had a pullback. Okay, I got to get in. But be patient, because the nature of pullbacks, the nature of them is not to be 1 to 2 to 3 day events. Occasionally we get that, right? We got it right here, where it was a 3-day event, right? Here was a 2-day event. We'll get some of those. But when we have a pullback like what we're seeing right now, that's happening on absolute game-changing elements in the market, it's not the type of pullback that just, okay, everybody back into the pool. That's just not the way it works, right? We saw in May, to a lesser degree, what we're seeing now. Now, in May, the market had the Fed on their side. The market doesn't view the Fed as on their side anymore. So there's a big difference between the market today and the market right back here in terms of the Fed, okay? The last time the market kind of was in this trade war element where the Fed wasn't on its side was here in December. So I think you can compare what's happening right now just from a overall overreaching standpoint, much more to December than you can to May. But think about May, right? It's fresh in our minds, right? We ran the challenge through May here, and we had some nice pullback during the month. But was this, market gap's down, now it gets bought up throughout the day. Okay, you know what? Because it got bought up, the bulls are now in charge. No, not at all. Did this market have anything to do with, the market closed on a rally, so now the market's going to go up? Or the market closed on a sell-off, so now it has to go down? No, none of those things came into play. They're not going to. When we get into a market where everybody is headed for the door, what happens into the close, right? Friday's rally, who cares? It just doesn't matter. Yes, there'll be pauses. Yes, there'll be stalls. But overall, the chances are very good that the market goes and hits new lows. Now, I'm not talking about day traders. I'm not talking about this, where's it going over the next hour? Okay, I'm talking about just a little more swing trade, a little more longer term, type of look. What do we tend to get, right? Yes, we can get the bounces, right? We saw it back here in October. We get the bounce, and we get to a new low. Notice the days where the market gapped down and then rallied throughout the day, or gapped up and rallied throughout the day. They didn't really matter, did they? Right? Then we get another bounce and another pushback and another bounce and another push onto a new low, right? Where did we finally create the low? Well, we finally created the bottom on some monster volume. All the volume right now shows us is what? Is that the market nature has changed. And we know it's changed from neutral on the market vibe to bearish, right? So the volume suggests that the market has turned bearish on this, on this move. We need to see another high volume point come in for there to be a bottom. Now, every one of them looks a little bit differently, but most of them do not happen after 2 to 3 days. Most of them happen after 2 to 3 weeks or 2 to 3 months. Right? So it's one of those kind of situations where, I have my shopping list. There's stuff I'd like to buy. I think, I talked about Bank of America the other day. I want into more Bank of America. Is it the time? No. It's not, unless I'm going to go sell some put options or something like that, which I may here today. But, in terms of, bottom is in, no. Right? To go and say that on a day like today, no. Is there going to be a bounce? Probably. A lot of these stocks are getting very far from their 7-day moving averages, and so the nature would be to get some sort of bounce. But if we go back and we look at various pullbacks in the market, right? And I want to go show you one in particular. This is 2015. Let's just take a look at the entire year. But here's 2015. 2015 had 3 absolute soul-crushing market days in it. They trade. I mean, the market went outside of what the range had been all year, and in August we just saw an absolute crush. The next day, market gaps up, it sells down. The next day, gaps up, sells off, rallies all the way back. I mean, huge volatility here in it. But if you zoom out and you don't think about this from a day-to-day, hour-to-hour standpoint, you think about it as, okay, when's the bottom come in, right? It took 3, 4, 5 weeks for things to finally shake out. And when we look at most pullbacks in the market, that's the nature of them, to where they take some time, right? Now, occasionally we get a pullback like we had in 2014, where we get the, let's see here, where we get this type of September action, right? And we get this kind of cratering action, right? But these 3 days, they didn't come off of a new high. They came off what? They came off of a bleed on lower, and then the panic kind of set in. So to hit that oversold extreme just kind of happens a little bit quicker, right? But this is still a 3-week pullback, right? We get this type of pullback, and then we had some game-changing news come in, right? That can ultimately, change it. So you have to be a little bit wary of what some of the news is. But we're going to see news reports, like we saw one on Friday, right? It was kind of a joke of a report that, the U.S. President Trump may not increase tariffs on the additional goods that were bumped up to 10%. He may not increase it to 25%. And what does that say? Absolutely nothing, right? Absolutely nothing. And the market shot up on it, right? On Friday, in fact, let me pull up futures here. The market shot up on it, and I just kind of rolled my eyes. But right here, and, it doesn't look like a massive move, but you can see the volume. Big volume came in. And, we're talking about a 25-point move on that report, right? That really kind of just a bogus, type of report. And we're going to see those. Those are going to happen. In fact, overnight last night, S&P futures, boom, big pop in them right here in a matter of moments. Big volume, right? Those things are going to happen. But is it really game-changing news? And the answer is absolutely not. And so we might get game-changing news, but it's got to be game-changing. It can't just be this, okay, things may change in a little bit, or so-and-so has a different opinion. No, it has to be game-changing news. We got game-changing news last week when it came to U.S. President Trump and the tweet, the series of 4 tweets that he sent out. We got on video, we looked at those, we talked how game-changing that is. And game-changing to the point where, for the first time for the challenge, I was willing to step in and say, you know what, algorithm be damned right now, I've got to get out of bullish calls on Valero, even though all the parameters were in play and everything else. So when we talk about game-changing, we're not going to talk about a little 20-point rally. We're not going to talk about a little bit of maybe positive news or analyst opinion. No, it needs to be something game-changing where we see the metrics themselves move, right? Things like the bullish percent index, things like the volumes, where we need to just see a massive move in the metrics. And, right now, we're not in that situation at all. And so it's one of those where the nature of a pullback, yes, it could end right here, right now, snap on back, go to new high in the next 3 days. That could happen. But the nature of a pullback is 2-3 weeks, sometimes 2 to 3 months, and sharper pullback 7 to 10%. And the way we saw things change, the way the Fed is not on the side of the markets right now, or the markets don't perceive that, this is one that could get pretty darn ugly, and where we could only be just talking about the beginning of a pullback, not the end of a pullback coming into play right here and right now. But right now, this is a very, very crowded theater, and the fire alarm has been pulled, and people are running for the exits. And there's not a lot of safe places to go, right? There are some quality names out there, right? There are some stocks I'd love to own right here. A Verizon, for instance, right? A Pepsi, for instance. I wouldn't mind owning. But you know what? We're just there's too much of that hit the door. They're not leaving and respecting everything that's going on around them. They're leaving with one objective in mind, and that is to get out, right? And we're in the market right now. The objective is to get out. It's not, well, what are the good fundamentals, and which ones have the better dividend yields, and which ones have the better, revenue trends, and which ones have the better those types of things that are very important when it comes to bull markets and stock picking. When it comes to bearish reversals, corrections, they don't matter because everybody's trying to get out. Right, Joe over in Joe over in Pennsylvania, managing funds, getting a knock on the door from his fund manager saying, "Look, risk factors in the market have changed. You have to sell stuff." And he looks over his portfolio and says, "Man, I really don't want to sell my Amazon, but I have to lower the risks, so I've got to sell some Amazon. I don't really want to sell my Apple. Man, Microsoft's a fantastic company. Look at all the good stuff going on. They really don't want to sell it. But I got to trim a little." And that's what we're seeing in the market right now. So, yes, can you be the hero? Can you go out and buy a Valero, sure, you could, right? But it's a hero trade. It's one of those where, you could get lucky, right? You could get lucky, but at the same time, you're going to need to get lucky. It's not something where the odds are overwhelmingly in your favor to be a buyer right here and you're going to be golden. We will have something like that. We'll have a reversal come in. We'll have one of those kind of days come in where we go, okay, some things are really changing right here. That'll happen. It probably won't happen today, but it could, right? Visa's going to go to a new high in the coming quarter. It will, right? And how deep does the pullback get? Well, you look at Visa pullbacks, they can be substantial, right? So, it's one where, yes, it will ultimately go to a new high. I can't argue against anybody buying it right here or buying it lower or buying it even lower because it will eventually go back to a new high. But, it's one where if you're trying to bottom pick right here, the odds just simply are not in your favor. So keep that in mind, the nature of the pullback and kind of where this market is right now in terms of in terms of leaving that theater and just absolutely, heading for the exits in a big way. You can take a look at I'll show a index map here. This is the S&P 500, the one I'm going to pull up. But you can see there are 23 gainers today. And some of those that have been gainers, most of them are in healthcare or pharmaceutical or utilities. But some of the stuff that's been up the most is off the highs. A few things holding in, like gold miners, Tyson Foods holding in there. But, you can see it's red. It's absolute carnage. It's absolute blood running in the streets. And there's that whole saying out there, buy when there's blood running in the streets and sell when there's people pounding at your doors. It's a great saying, and it has some validity, right? When you're talking hindsight, but in real time, how much blood is enough blood, right? The blood running in the streets can always get for a grotesque analogy, thicker. It's just one of those things that have to respect and have to take into account as far as being a very, very possible out there. Okay. As we go forward this week, I'll talk about some of my stocks on my shopping list and some of the ones that I'm looking to be a buyer of as, when things stabilize a little bit. Some of those aren't going to be a big surprise to you. Some might. But, we'll look at those. But, today is not the day where I'm going out and saying, let me get my list and let me go out and buy. Let me go out and shop. Because let's face it, today, the market's only down 2%. Market's only down 2%, right? This isn't one of those 5% days. It's not one of those 6% days that we have seen. And I would be very surprised if at some point during this correction, I don't mean it's going to happen tomorrow. I don't mean it's going to happen today. I don't mean it has to happen this week. We may see a little rally come in and then it happen. But I would be very surprised if the market gets out of this correction without one of those 5 to 6% down days where you just look up at the ticker tapes and at the carnage that is absolutely out there as that forced selling, comes into effect. You think about the news cycle, what's going on out there, the stuff in Hong Kong intensifying, doesn't help. But, U.S. President Trump and China, they didn't do anything to calm fears over the weekend. They both went into full escalation mode. And that's where they're at right now. And, until they get into de-escalation mode, the market's going to continue to head for the doors. Okay. As I mentioned, for the challenge, there are a few crossovers happening. We have GOLD crossing to the upside here with the 3 and the 7. But if you look, the average to range is 55 cents. This stock has moved almost $2 to set the signal. So the probabilities are not very good. Now, do I think GOLD goes higher? I really do. But it's not something that I can play for the challenge. Procter & Gamble has a downside 3-7 crossover here in it. Been a lot of selling volume come in. You can see where it sits as far as the Stoke 39.1, still well above 50 there. But coming off new highs, it just the chances of it setting a signal are very low. And this morning, consolidation risk is very high. And then good old Vulcan Materials, who I swear is on the 3-7 crossover list every single day, and every single day it's a different direction. But in absolute consolidation here when it comes to Vulcan Materials. Things like Chipotle on the last little pullback starting to get a downside 3-7 cross. But you can say, we're still up in the high side of the range coming off of highs. And, that doesn't mean it can't pull back, but what it does mean is it's not going to trigger for the algorithm. Because when you look at data over a long period of time in the market, right, when stocks hit new highs, when they pull back, the tendency is not for a sharp pullback. The tendency is for consolidation, like what we saw here in June on Chipotle, right? The tendency is not for a sharp pullback. It can happen. We can get that. It does happen, but it's not the probable outcome. It's not the most consistent outcome. The most consistent outcome is for consolidation and then some sort of resumption of the upward move. Okay. Later on this afternoon, when I hop on at 2:30, we'll take a look at any signals that are out there. Go out and step into any trades that are on the board. I will also share the stats here for the 60-day stats for the challenge. We are about 2/3 of the way through this challenge in terms of trading days. So we'll share those numbers here with you this afternoon. Okay. Last thing. The ISM data, and I didn't look at it last week with you on a video, and for a reason, because while yes, this is important data, and I think this data matters a heck of a whole lot, doesn't matter right now. Doesn't matter right now. This is not what anybody's making any decisions on. Came in at 51.2, right, which was just slightly slower than the month prior. New orders did uptick, but are still pretty flat. Production dropped big. Employment dropped. Inventories rallied, right? Prices dropped. I mean, you look at this, imports, exports, backlogs, it all dropped. This is an ugly number. This is an ugly number, and it's an ugly mix inside of this number where the number's being supported by deliveries, inventories, and customer inventories. But, the Fed talking about, we're not going to cut really, or, we may want to slow down the rate cut cycle, due to jobs and the fact that we don't see deflation. They call it disinflation. This ISM number, and I know it's just a survey, so they don't take a lot of stock in it. This is one that is showing that the Fed is wrong, that the Fed is just wrong. And, we'll see how that plays out as we go forward. But I don't think this is anything the market is surprised at or the market's really reacting to in a big way. That there's much more game-changing, type of elements out there in the market at the moment. And a wall of worry that is only increasing, not starting to decrease or not maximized here just yet. Thanks for hopping on. Have yourselves a fantastic day, and I'll talk to you this afternoon. Take care.